get a credit assessment. We have a free credit assessment solution here. So to do a free credit assessment, I'm just going to go over why the good reason to have that, and to tell you a little bit later on what might be in your credit report and what we need to be looking at as far as your credit report is concerned. So let's have a quick look. I just want to make sure that I'm covering everything for you. So the first thing we're going to do is we're going to be able to look at reviewing your income, your expenses, your liabilities, your debts, your assets. So we need to see where you're standing first. So to do a credit assessment to see if you can borrow money, we need to see what your borrowing power is first. So that's all your income, your employment history, whether you're part-time, casual, full-time, contract, bonuses, allowances, and all of those things. And then we can calculate everything and see where you're servicing. Also, if you're self-employed, your tax returns, your BASs, or whatever the case might be, or whether we need to do add backs and things like that. So it's quite comprehensive to have a credit assessment done, but it's also free to you. All right. Just remember that if when you do get a loan through me, I get paid by the bank. So the bank of your choice, that's when I get paid on the settlement. So my services here are free, but also you've got to understand that when you do take a loan, I will get paid commission from the bank. It's not an extra that's added onto your loan at all. All right. So the other thing is we have to look at assessing all that serviceability. And then we will also be looking at the credit risk score and the reporting. And I'll just talk to you a little bit later on about what sort of things they're looking for in there. And I'll give you a little bit of a scenario that I had with a client. We got through and everything, and it was to do on something little that was on the credit report. And so if we had fixed that up first, most of the other lenders, it was not a problem, but the particular lender that we're going with was a problem. So all the lenders have a lot of different credit policies as well. Okay, so let's have a look at what are the benefits of getting a pre-loan credit check. So one is to see how much you can borrow before you can go house hunting and put a contract on a property. Compare loans so that we're able to compare loans, there's no problems, and that gives you a better opportunity to be able to have better loan choices as well, than only being able to fit with one or two lenders, and maybe get you to a point where we got a choice of lenders, some good interest rates and things like that, cheaper interest rates obviously, because money's money no matter where it comes from. Increasing your chances, well, we just spoke about that. Get tailored strategies. So I need to know what your story is, why you're wanting to do this, what is the end goal for being able to get a credit assessment, and so that I can work with you. So, okay, I'm a mortgage broker, but I like to see myself as your relationship broker with finance. So that's why we do go through your story. You're telling me the story. I'm not going to the lender or anything like that. I'm not getting any hits on your credit report or anything like that. The other thing that is, we might be able to fix issues on the credit report before we start applying. So when we start applying, that's when you start getting an extra inquiry or so forth. So if you walk into a bank, I want a loan, blah, 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 you're going to get a hit on your credit as credit inquiry. It goes against you. Okay, so how much can you borrow? So let's have a look at some of the things in regards to, so all your gross and net income, we need all your monthly expenses and debts. The other thing when it comes to expenses when we're doing a credit assessment is to be looking at things like, there are certain things that banks, you know, it's a red flag. I'm not saying you can't do it, but it is a red flag. So gambling, tab, alcohol, cigarettes, entertainment. So look at these expenses, and if you're looking to buy a home and worrying about what your income is and worrying about what's in those bank statements, might be a good idea just to draw down some money each week, put that in another separate sub account and use that for your entertainment, gambling, tab, whatever. and then it looks like giving the money to the children or whatever like that. So you can move your money around so that you don't have to stop doing those things. But when we're looking at the bank statements to match against your expenses and income for your lending, they're the things that are going to count. Family size and dependents. The other thing is how many dependents you have as well. So that does come into account, which comes into what they call a household expenditure measure. So how much money it's going to cost you to run a household, a family household. The loan type and interest rate. So we also need to look at these things as well, and the loan term preferences. So you might be able to get a 30-year loan, but you might be 50 wanting to get a loan. Well, you're only going to be able to get a 25-year loan, or you might be 53, so it's 23. The lenders will only lend up to the age of 75, so you'll need to factor those things in as well. So the things that we might even have to look at improving some of your serviceability. So improving some of your serviceability might be, let's look at your budget. Let's look at your expenses and have management tips. Debt consolidation and credit repair strategies. You might want to think, okay, well, I've got 3 credit cards, two car loans, maybe get down to 2 credit cards, lower the limit. It makes a massive difference when it comes to your borrowing power. Also, you might have a couple of car loans, or you've had an unsecured personal loan or whatever. You might be running a business on a credit card still. You might want to get a cash flow financing business line of credit on a cheaper interest rate and running that more so that you're able to claim that better. So we just need to look at all these things. And then some smart planning on saving for a deposit, or looking at bringing some stuff down, and then looking at maybe at repairing some things. You might have some things, we're going to talk about the credit report in a minute. And then choosing the right loan structure. And this is really important. So when we're going through this as well, we want to make sure that what type of loan you want. So you might be wanting a loan that is a basic home loan, fixed rate. I want to lock it in. And then you realise, I wanted to have an offset account, and you've not been able to have that. Or you might have an account that's, you don't want to pay monthly fee, but if you have one that's got a very small monthly fee, it might give you an opportunity for an offset, a redraw. It might be a lot more flexible, the loan structure itself. So I go through all of these things with you to make sure that what you've got, this bank will do this, I might like this, but if it might be a 0.2% more interest rate in this, but this is more suitable for you in a long term. So, all right. So let's have a quick look at what might be in your credit report. Let's talk about credit reporting. Okay, in your credit report, it is a credit score between 0 and 1200. The current and past credit accounts, so your past and credit accounts, so any loans you've had, any credit cards, anything you've applied for that's there. Your loan and credit card limits, everything is limits. So when you lower your limit, that'll end up showing up again on your credit report. So it's a really good idea to get yourself a free credit report every year, just to check to see what is on there as well. Missed or late repayments, and defaults and judgments, and recent credit inquiries. Now, that's just talking about the recent credit inquiries. So if you apply for a home loan, a personal loan, a credit card, anything like that, it's an inquiry. And if you're going to go for a home loan, they're going to look at that. How many inquiries have you had before applying for the home loan? So it's really important to have a look at, see what you've got there, and then we can clean up some of these things. There are credit repair companies that can help you out with these things, but a lot of the stuff that you can do yourself as well. Missed or late repayments. This is something, I had a scenario with one of these. It was, it turned out to be about 3 months straight of missed repayments. People don't understand that when you have a late repayment, you might be paying a repayment, but if it's constantly late, paid, but it's late, it's paid. Credit cards, all those things. It's really important that you pay them on time, because they will end up on your credit report, and your loan could get declined because of it. So it's a big thing. Defaults and judgments. Now, defaults and judgments can be very tricky as well, and sometimes you have to have them professionally removed from your credit report. Now, these could be, these are classics, telco companies, Telstra, Optus, all of those sort of companies. If you've had not paid a phone bill or something like that, and a lot of these things can happen if you've got a joint account with your husband or your wife or whatever, and you've separated, and you might get to a point where I'm not going to pay it, I'm going to let them pay it, and you get into a bit of a squabble about that. Be careful with that, because that's going to end up on your credit file, and it's going to cause a lot of issues. So it's one thing that you really need to keep an eye on, that sort of thing as well, because something might be in someone else's name. So I would be personally making sure that I'm checking my credit report, that anything that is getting listed on there. A credit report is like a health, it's exactly like going to the doctor for a health check. It's your credit. So who should do an assessment? Well, personally, a first home buyer really should be doing an assessment. It's very daunting in the beginning just to buy your first home. So I think that somebody who is a first homeowner, have a look at all these things. This way I can educate you on all of these things. Homeowners wanting to refinance, definitely. Property investors, see where you're standing to see whether you're in a position to be able to buy another property. Have you got your finance done? Have you done your your refinance to be able to take some equity out? You're ready to go. You've got your deposit ready to buy the next property, and you can afford to do that. Self-employed and low doc applications. So these are people who, low docs are people who might not have done their taxation, so we need to get accountants letters, or we've got to clean up all those things. It'd be better off to do that. And self-employed, basically. So to anyone who's been denied for a loan recently, it's a really good idea to have a credit assessment done, so we can look at why you might have got declined, and then we can clean up these things ready to go again. And anyone unsure where they stand with their credit standing, obviously. So look, it's not going to take you long to do. Reach out to me. I can go through all this with you, and we can do a credit assessment, and then I can show you where I stand to even get you all ready for pre-approval, ready to go. Here I go. It's like cash in the bank. All right, no worries. Carrie Ann Simpson, local mortgage broker in Caloundra. I'll speak to you later. I hope it's been very helpful for you. And look, just reach out. Give me it's a 15-minute chat. We can just have a talk and get in touch with me today, and then we can see where you stand. Look, it doesn't matter what mess you're in right now, but let's work towards a plan to get you in a really good position. Okay, see you later. You don't have to do it by yourself. Bye. I hope you found the information useful. Please subscribe to the channel and help me grow, so that I can give more educational material for you in the future. Okay, we'll see you soon, or give us a call if you need to.